Dear investors, on behalf of Bellevue Asset Management, I would like to welcome you to our update call on African opportunities. My name is Tanya and I will be your host during the call. The corona crisis has also left its marks in Africa. Egypt and Kenya have already secured billions in financial aid from multilateral institutions to overcome the liquidity shortage. Meanwhile, South Africa is still in discussions to obtain a financial package. One lesson from the corona pandemic is that liquidity flows need much more attention. Now I'm delighted to introduce Andy, who joined Bellevue in 2015 as an analyst and portfolio manager for the BB African Opportunity Fund. Prior to that, he was a senior analyst at Exotics in London, covering the brewer and cement companies listed in Africa. In the following minutes, Andy will talk about the COVID-19 impact on Africa, the fund performance and positioning, as well as venture a brief outlook. I would like now to hand over to Andy.
Thank you, Tanya, and welcome to all of you joining us on this second recording discussing Africa in the context of the COVID-19. Let's now start and the impact on the continent on slide 4, on which we updated the number of active cases in the region, standing above 170,000 in late June, up from 5,200 cases in late March. This increase shows an acceleration in the virus spread, especially in the two hotspots, South Africa and Egypt, that you can see on the top chart on the right-hand side of the slide. Both countries represent more than half of Africa's daily increase in active cases. And like in other parts of the world, we think that these statistics need to be taken with a pinch of salt, given that the lack of testing or transparency suggests a higher number of cases than official figures show. To put those numbers into perspective and comparing total active cases per million inhabitants in Africa to those in a few other markets, you can see on the bottom right charts of the slide that South Africa and Egypt have lower active cases numbers than the US, the UK, Brazil, or Russia, which present a more alarming situation. On a more constructive development though, some African countries, such as Morocco or Mauritius, were more successful in addressing the COVID-19 outbreak, as active cases there have come down, a trend that is also confirmed by on-the-ground research. While African nations were quick to introduce containment measures to slow the virus spread, most of them developed in the cautious removal of the restrictions, despite the fact that the total active cases are still on the rise, and this most probably because lockdown measures appeared difficult to keep for a more prolonged period. Governments also introduced some fiscal support, and we listed on the bottom left of the slide a few examples showing the stimulus packages that could amount to several billions US dollars. These initiatives came with social programs to help the most fragile part of the population. Moving on to the next slide, slide 5, we kept from our first WebEx call the top chart on the left-hand side as a reminder of how important commodities exports, tourism, and remittances are for the current account positions of the main economies we follow. And the fall in earnings from these key FX sources post the COVID-19 outbreak led to FX reserves drawdowns and pushed several countries to request the support from multinational institutions such as the IMF or the World Bank. Represented on the bottom left chart, the total amount Egypt, Nigeria, and other countries received from multinational institutions. Some of this money coming without conditions, while reform targets came as necessary conditions for the disbursement of additional financial support. Obviously, these institutions are more inclined to support countries firmly engaged on a reform path, as detailed for Morocco and Egypt on the right-hand side of the slide. Overall, the intervention of multilateral institutions helped avert an immediate balance of payment crisis across the region. However, currency risks still remain for a few countries. Talking about currencies and moving on to slide 6, We presented on the left-hand side the year-to-date performance of key African currencies against the US dollar in dark green, and their rebound since the 2020 drought in light green. From this chart, the South African rand stands out with the strongest rebound since it reached its drought, given it benefited the most from the global risk-on sentiment since April and May, especially as it is perceived as an EM currency proxy. Commodities exporters continue to show weakness, while FX shortages in Nigeria, Angola, Zambia, or Ethiopia remain acute. All in all, despite the recent strengthening versus the US dollar, most currencies are still weaker year to date, except for the Egyptian pound and Moroccan dirham that remain steady. On the right-hand side of the slide, we show the yields of Eurobonds with the shortest maturities. More specifically, in light green bars, the extent of yields tightening post their 2020 peak, as the global risk-on sentiment allowed a general move in yields downwards. Despite this relaxation in financial conditions, yields are still higher versus their pre-COVID-19 level, except for South Africa and Morocco that saw lower yields on their Eurobond maturing in 2020. Lastly, and this is important enough to be mentioned, Egypt is the only African country that has come back to the international bond market since the COVID-19 outbreak. It successfully raised a combined 5 billion Eurobond at a yield range between 5.75% and 8.90%, across maturities going up to 30 years. This issuance was more than 4 times oversubscribed, and it is a testimony of the soundness of Egypt's macroeconomic dynamics. The next and last slide of this chapter presents the rebound in African equities since the drought, apart from South Africa, like the rebound observed in developed and emerging markets. Two main reasons behind this underperformance. First, the poor domestic liquidity across African markets. Second, the lack of foreign portfolio inflows. The South African stock index appears as an outperformer once again, as shown on the light green bars, mostly on the rand strength, but also because of the country's access to global flows. The latter was more muted in other African markets, hence their more modest rebound. On the right-hand side of the slide, we thought it's interesting to show the change in sovereign yield curves in Africa versus that in developed markets by comparing South Africa and the United States. What strikes us the most from these two charts is that the monetary easing post-COVID-19 led to a steepening of the curve in South Africa, showing that the central bank's decisions only impact the short end of the yield curve. While in the US, the whole yield curve shifted downwards, likely on the Fed's asset purchases. Net-net, monetary easing in Africa appears less favorable to equities than in developed markets, especially because the rise in long-term yields across the continent limits the re-rating of equity valuation. Now, how did all these developments affect our performance? A quick answer to this question is to move to slide 9, summarize the year-to-date performance of the Bellevue African Opportunities Fund. The fund reached its post-COVID-19 trough at a year-to-date performance of minus 31% in mid-March. And since then, the fund rebounded by 22%, in line with other EM and frontier markets, but behind the US equities. Year-to-date, our performance is in line with that of Europe. And even though the fund managed to outperform most lead equity indices in Africa, our year-to-date performance is still negative at minus 15% in euro terms. Having said that, there are 3 main points we think important to share at this stage. First, the record high outflows seen in EM and frontier markets funds over last March and April receded. Second, the return of the risk-on sentiment drove flows back into fixed income funds in the EM and frontier space. whilst equity funds have not seen an evident reversal in flows yet. And the third and last point we wanted to share is that although we believe historically low valuations could drive a strong equity rebound in the long run, we need more than this to see a stronger near-term rally. What can we now say about our positioning and outlook? The last chapter of this presentation will share more light on this. Starting with slide 11, that shows where the BB African Opportunities Fund is positioned versus some of the best-selling equity funds in January this year. And we are in the bottom right part of the chart, which is the sweet spot for funds positioning as we stand in the high growth, low valuation area. African equities currently suffer from a low liquidity, but we positioned ourselves to benefit from the return of that liquidity in our markets, although the exact timing of this return is a bit difficult to gauge. Now let's move to slide 12, on which you will find a good summary of our investment approach. And the key word for us is reforms. Reforms because countries that consistently delivered on this for fiscal stimulus. Two good examples in our regions are Morocco and Egypt, that with the help of the IMF these last years, restored their economic balances and ended up with sufficient monetary and fiscal headroom to support local businesses and employment. We will also add that for the case of Egypt, low equity valuation provides a safety margin against short-term pressures on earnings, while Morocco has been among the regions best in class in controlling the virus outbreak. On the other side of the reform spectrum, we have South Africa and Nigeria that failed to implement important macroeconomic reforms. And these two countries are now in a much more difficult situation to face the economic impact of the pandemic. First, they have a limited fiscal space to introduce stimulus policies. Second, their ability to rebound once the shock effects fade is likely to disappoint. A strong signal of these challenges in South Africa is the series of right issues that hit the consumer sectors in May and June, showing the strong headwinds to domestic consumption. In Nigeria, the central bank's unorthodox approach on the FX and banking regulation has kept us away from local equities. And we must say that we feel comfortable with this choice today, given that other foreign investors invested in Nigeria have not been able to repatriate their US dollar since last March. In terms of portfolio changes, what we did lately was to boost the fund's liquidity by reducing our positions in less liquid names in Egypt and Morocco. And we also cut our exposure to Kenyan banks on higher NPL risks. We also increased our exposure to gold mining names as we look to manage the short-term volatility in our markets. Overall, Egypt and Morocco remain our core positions as the post-COVID prospects are still not impaired. The fund's liquidity will help us react to a fluid situation and seize opportunities when more positive momentum resumes. With this, I will now hand the presentation, and thank you very much for your interest in our fund. And Tanya, over to you.
Thank you very much, Andy, for the interesting update. I can well imagine that this is an attractive entry point for interested investors into our BB African Opportunities Fund. On behalf of Bellevue Asset Management, I would like to thank you very much for your trust. And should you have any questions, your personal contact will be happy to answer them. In this spirit, I'm wishing you a successful business and stay healthy.